So I was waiting for the Federal Reserve to update their balance sheet. It was delayed. Finally just came out after hitting the refresh button quite a bit in the last hour or two. Finally have the updated. And again, I was suspecting it would be pretty bad. It's not pretty again. It's not as bad as last week. Last week, in only a week, the Fed's official balance sheet was up almost right around $52 billion. An insane amount. This week, it was up around, I think, 20 billion. See the exact number. It's up to 4,039,443,000,000. And I ran the numbers since the end of August. The Fed's official balance sheet is up just under $280 billion. That means that the quantitative tightening program or balance sheet reduction program, which was, I think, $60 billion per month, that it has given back 5 months of gains in barely 2 months. Barely 2 months. So the chart on your screen is actually the total amount of repos. This was directly from a New York Federal Reserve speech. It's directly from the New York Federal Reserve website. And it was put on there on November 4th, and the speech was given by Lori K. Logan, Senior Vice President at the New York Fed. Hat tip to David Quinteri at Money GPS, who posted the link to there, and I took a look at it myself. I found that chart. He didn't post that chart. I'm using that chart because the chart tells, and she said in her speech, the Fed is averaging $190 billion per day of repo madness, not the $120 billion per day figure. So when you add in the term repos and all the stuff that's rolled over, all the stuff that they said would not go onto the balance sheet permanently, the Fed is averaging $190 billion per day in repo madness. That means with an average like that, that means there are some days where it's way above 190 billion. Could also mean there's some days where it's way below 190 billion. But there are days, and Jim Bianco has been tracking this, where the total amount of repo madness is well above $200 billion. And in spite of this, in spite of all this craziness, in spite of the Fed increasing its balance sheet very, very rapidly in just the last couple months, last 2 months, give or take, in spite of repo madness, the dollar index is rallying. The dollar index is back above 98. Welcome to dystopia, right? So what this tells me, the 10-year treasury now, the yield is still going up, but this tells me that capital is still coming into the U.S., that there's net capital outflows out of Europe, out of emerging markets, out of China. Crazy stuff. So this chart is directly from the New York Federal Reserve. You can see there it's sourced. So a picture is worth 1,000 words here. So these repos, the overnight repos are now, it's gone from initially when Repo Madness first became public there on September 17th. You know, we started hearing about it on Twitter the night before on September 16th, and all the articles coming out like crazy on September 17th. You can see how big the Repo Madness has gotten. It is nuts. And I think people like David McElvaney, Jim Rickards, others are really onto something when they're saying something broke. Also, Wolf Richter did a really good short podcast on the Wolf Report in the last couple days, talking about the history of repos. And before the Fed started doing QE, they were heavily involved in repos, and that's where banks were allowed to dump stuff onto the Fed, and the Fed was playing a lot of games in repos. So the Fed had a permanent repo facility before it got involved with official QE. So in spite of all this craziness, the Fed increasing its balance sheet very, very rapidly, a lot of that quantitative tightening that was done has all been wiped out. The Fed's balance sheet is now well over $4 trillion with no signs of going down. We were told that none of this repo madness stuff, remember, the not QE, and I'm using air quotes, QE program is only $60 billion per month. So all this additions, this other $220 billion, give or take, besides the 60, there's been one $60 billion purchase, right? Because there's only been 1 month so far of, well, it's not even a full month yet, of not QE. So that $220 billion or so is all on Repo Madness, or the Fed taking the money that's rolled off from mortgage-backed securities and reinvesting those into net U.S. Treasury purchases. Isabella asks, is there also the intraday repo? The only repos I know about, you have the overnight repos, which are now up to at least 120 billion with quote unquote good collateral, and then you have the term repos. But I think there's a number of term repos. I think there's a 15-day term repo now. So initially there was no term repos, and then they started adding the term repos. We were told that these 14-day term repos would roll off. We were told that the balance sheet would not increase. The facts say otherwise. I spent the last 2 hours hitting the refresh button. I was going to do another show, but thankfully I hit the refresh button a few minutes ago before I came on here, and the Fed's balance sheet updated. Because this fits in. So we're having a dollar, and remember, the dollar rally is relative to the other garbage fiat currencies. The dollar is also, it's the nicest horse in the glue factory, the cleanest dirty shirt. You can pick your cleanest dirty shirt in the laundry basket. You can pick your analogy. All fiat currencies are basically garbage as far as I'm concerned. They're talking about an intraday repo. Nah. I think it's just to confuse and obfuscate more. It's ridiculous. I mean, they're going to put in this permanent repo facility too, which is going to have minimum 300 billion. They're going to do this permanent repo facility too, because the Fed had it before they did QE, and then they got rid of it. And now they've been arguing for it back. It's been talked about. This Wolf Richter podcast, I'll put the Wolf Richter podcast, I'll link to it. It'll be at the end of the show. It'll be as a video link at the last 30 seconds of the show after the show's over. And then today, of course, the gold price gets smashed. According to Craig Hemke or Turd Ferguson was his nom de plume before Kid Dynamite outed him, who's also using domain by proxy because he doesn't want to get outed. Just funny Twitter and internet stuff. The amount of gold futures contracts is now at an all-time high. 694,000 contracts of paper gold. And I talked about this on the show yesterday. The paper gold is what is used to help manage the price. Now, the miners have had the primary gold and primary silver miners, all of them that I've seen so far, all the earnings are solid, except for Endeavor Silver. Does not look good for Endeavor Silver. I hope they can make it. Doesn't look good, though. But the primary silver miners are in worse shape relative to the primary gold miners. But the primary gold miners have had 2 good quarters now of better cash flows, better margins, but they're not able to raise $100 million or more to fix their balance sheets because the majority of institutional investor money, which are the large pools of capital that want exposure to gold, they don't want to buy individual mining stocks. They only want, this is just my opinion, talking with my contacts and others. I should probably get Nolan Watson back on for another interview soon because literally he has all these deals come across his desk of miners of all sizes. So he takes a look at the balance sheets of all these mining companies for potential deals. So that's why him and the other royalty and streaming companies, they're the main financiers now of the mining industry. They get to see all the deals, how bad the balance sheets are. They get to see all these things, all the details. That's why if you want to study the health of the gold and silver mining industry, look at the largest royalty and streaming companies. Take a look and see what the types of deals they're doing, what they say about the health of the miners. But a lot of the institutional money is not going to individual mining companies. The institutional investors do not believe in the gold price rise, the rally. They're not bullish on gold yet. So if they do want gold exposure, they're either buying physical metal, or they're only buying royalty and streaming companies, or they're only buying mining stock ETFs. The individual mining companies are not getting access to the capital markets like they thought they would. Have you finance freak, but they told you it would only be temporary and wind down with the year-end tax burden. Are you familiar with the Milton Friedman quote? I've seen Peter Schiff use this too. I've been using this a lot. It's a great quote. And Milton Friedman says, I don't agree with Milton Friedman on a lot, but I agree with him on this. He had a great quote about, like, if the government was in charge of the Sahara Desert, like, within 5 years, the Sahara Desert would be out of sand. But the great quote that's more appropriate for this is, there's nothing so permanent. There's nothing so permanent as a temporary government program. So look, when President Richard Nixon suspended the gold standard, right, in 1971, it was only supposed to be temporary, right? Here we are over 40 years later. It was only supposed to be temporary. All these other government programs that were only supposed to be temporary, they're all permanent, going on decades, larger budgets, more spending, fighting all spending cuts. Oh, thank you for the super chat, Ben. I appreciate it. Yeah, so we'll see what happens with the paper gold price, but you're going to see Franco-Nevada and Sandstorm Gold and the larger royalty and streaming companies. The rumor is there's another royalty and streaming company, a larger one that might be going IPO in 6 months or less. I think it's a private company. It's like Triple Flag. I think it's called Triple Flag. TripleFlagPM.com. They're looking to raise like they already have 15 royalties and streams cash flowing. They're a private company. They're not on a stock exchange yet. They own a 2% royalty on the Fosterville mine. That is a big cash cow. That's like the best, lowest cost, highest grade gold mine on the planet, producing gold mine right now in Australia. They have a 2% royalty on that. That is minting money for them. So they're looking to raise like a very large amount of money, from what I've heard from my contacts, like 9 figures. So they're going to be going IPO maybe 6 months from now or something. That's the rumor. I wonder what valuation. I mean, if the valuation's too high, normally IPOs are bad, but that sounds like the royalty and streaming business, as long as they stick to royalties and streaming, it's a very solid business with diversified cash flows. Yeah, welcome to dystopia. That chart is ridiculous. I mean, it's only going up. That chart itself proves that Repo Madness is not getting better. It's only going up. So you have Repo Madness and not QE. And the dollar is rallying. Welcome to dystopia, right? Isn't that a head scratcher? I think, seriously though, I think there's a number of reasons why the dollar is rallying. I think there's still net capital outflows out of Europe, out of China, out of emerging markets. It's coming to the US and to different markets, although apparently not into the 10-year treasury anymore. Central banks, all these major central banks are all expanding their balance sheets now like crazy. There's no more pretense. Although with a Jerome Powell press conference, he is going to claim, he's claiming that, oh, we're going to expand our balance sheet later. Well, the data that's released is they've been expanding their balance sheet since August, when they said they weren't going to do it. Mark says QE, not QE. No, I like calling it, quote unquote, not QE, QE. So you put not QE in air quotes and then QE after that. It's funnier. At least I think it's funnier. But I'm sure the Fed has enough money to hire marketing people, very expensive marketing people from New York City, like a marketing department. And they'll focus group and test it out, and they'll come up with a better phrase to confuse and obfuscate and fool more people. I haven't seen an article on the intraday repo. If there's an article that just came out, you can send it to me. I haven't seen one yet. But she admitted in her speech that the average per day repo is 190 billion. That's average. So on the average, that means there could be extremes higher and extremes lower. That's a scary amount of average. To put it in perspective, let's look up the market caps of some banks. Let's look up the market caps of some banks. Let's see here. Goldman What's Goldman's market cap? Goldman Sachs's market cap is only their stock market cap is only 79 billion. So the amount of intraday repo is more than Goldman's market cap, or more than double. JP Morgan. Let's look up JP Morgan's market cap. 407.7 billion. So it's about half, almost half of JP Morgan's market cap. Wells Fargo, 228.385 billion, because Wells Fargo's had all these fraud stuff lately, because Warren Buffett, lately for years now, Warren Buffett, almost any company makes an investment in, there's accounting scandals, accounting fraud. So the 228.3 billion, that's almost what the overnight repos, the total now, the average total per day, is almost what Wells Fargo's entire market cap is. Trade-weighted dollar index, I have that chart up. Trade-weighted dollar index is coming down quite a bit. It got as high as 131.5789 on Wednesday, September 4th, and 131.3435 on Wednesday, October 2nd, and it's been in a correction, still pretty high, but it's down to 129.435. I don't think they've updated it this week. They updated it, they updated it early this week, November 4th. There's a lot of rumors going around now. It could be SoftBank. SoftBank has a lot of problems. SoftBank had a credit default swap scare, I think, last week. I should do a show on that. Wolf Richter really talks about the fraud in Silicon Valley with the unicorn IPOs and the tricks that companies like SoftBank play with doing smaller financings at higher valuations and then claiming that all the other investments are all valued higher. So they do a tiny little financing for one of their companies at a higher valuation, and then try to claim that all the other investments have the higher valuation. Could be SoftBank. I've met a number of people in the last couple weeks who think that SoftBank could be the next Lehman Brothers. And they have a ton of bad investments, a lot of hidden problems. Deutsche Bank's the obvious one. Could be Hong Kong banks. Kyle Bass put out a tweet talking about how Hong Kong banks are offering very high teaser rates, but I was looking at some of the comments under the tweet from other people, and they're saying that the banks were only offering very high interest rates to depositors as some type of teaser. That it wasn't because the banks were in desperate need of capital. So I don't know. Kyle Bass thinks one thing and the other people think another. I think Hong Kong banks are very fragile. I don't know if Kyle's right about that. I'd love to interview him. I haven't heard any new stories lately about Chinese banks. I covered the last story I found out about the bank run last week. So the official story out of Beijing was that the big four state-owned enterprise banks were supposed to cover all the bank bailouts. But the large four state-owned enterprise banks are being asked to bail out almost everything there now. Like provinces, pension funds, smaller and medium-sized banks. They were asked to contribute more bank shares into China's new Social Security fund. That was the story that came out in the last month or so. There's rumors going around. I've heard the rumors the last few days that Deutsche Bank already filed for bankruptcy. I haven't seen a legitimate story confirming that, though. It's still rumors. And then the question, if they do go bankrupt and their equity's wiped, will the central banks, will the ECB and the Federal Reserve come out with a joint statement and try to calm down the market, that they will try to guarantee partially the derivatives? I mean, mathematically, they can't, but most people don't care about that. The people on Fast Money and the talking heads on mainstream financial TV, if the central bank issued a press release, they wouldn't question them on it. So if a central bank, they issued a joint press release saying the European Central Bank and the Federal Reserve are ready to guarantee all derivatives by Deutsche Bank now that this is hypothetical, now that they filed for bankruptcy. I mean, the average financial professional who wants the stock market could go up, whose salary is based on commissions and assets under management or bonuses for assets under management, doesn't want the stock market to crash. They're not going to question the Fed. Even though it's like, wait a second, the Fed doesn't have, if the Fed guarantees 70 trillion in derivatives, first of all, the European Central Bank doesn't have the world reserve currency, so they can't print 70 trillion, not without their currency, being drastically devalued even faster than it already is. And the Fed creating 70 trillion would create a lot of problems too, especially in a quick amount of time. So I don't expect Repo Madness to improve anytime soon. The chart here is worth 1,000 words. More than 1,000. Jim Bianco, props to Jim Bianco. He's been running the numbers like this himself, and he's been saying some ridiculously high numbers, and some people didn't believe him. And look at the Fed. The Fed's numbers are confirming basically everything that Jim Bianco's been putting out for the last couple of weeks. And Jim Bianco, and this is important, Jim Bianco saying that the Fed is going to have to do a lot more QE, hundreds of billions of dollars more in the near future. Okay, well, that's it for this update today. I want to thank my over 180 Patreon account contributors. We're working our way to 200. Hopefully, it'll get to 200 or more by the end of this year. Thank you to my dozen or so monthly PayPal account contributors, and thank you to the people who chip in once in a while. It's much appreciated. Hopefully, in the near future, I will have a post office box set up for people who want to send me a paper check or some physical gold and silver. I'm thinking about that right now. Also looking for new business partners. Want to help me grow my business. Not in a hurry, though, for that. But if anyone wants to email me with ideas, talk. I have a full business plan for an educational technology company. It almost got funded 3 or 4 years ago with like 6 figures. So that's been on the back burner while I focused on making money off the podcast. It's a legit plan, though. I worked very, very hard on it. Spent years working on it. And I've had a lot of good investors look at the business plan in the past, like Doug Casey and Eric Sprott. Almost got a check from Doug Casey in the past. Okay, well, that's it for right now, and I will look for new content. I think there's going to be there's so many stories to talk about. I could do a show on the auto market in the U.S. There's crazy bad signals about the auto market in the U.S. There's SoftBank. I could talk about that paprika, the comparison side by side with showing more shrinkflation. There's people who are not aware of the marketing. If you work in restaurants or retail, you know that these companies change packaging a lot. The new buzzword now is premium. They stick premium on almost everything, even if the ingredients are substituted and they get worse. The China deal is close. Yeah, it's close every day. Trump, the China deal is BS. China wants all the tariffs removed before they sign anything. If I do a sugar daddy show, the videos may get demonetized, and I don't think it's a good idea. A lot of that stuff is not safe for work, and I could talk about it over a beer with friends, but I shouldn't put that on a podcast recording. I mean, my channel's already being heavily censored the last 2 months. I've added 100 new subscribers, despite unique content every single day. My ad revenues are down, I think, almost 40% now. But thankfully, my Patreon is keeping things in good shape. But the election is less than a year away, right? So that's why Google's ramping things up. Google and YouTube are going to do their absolute best to make sure Trump does not. I didn't vote for Trump, but I think Google, in my opinion, Google and YouTube are going to do their absolute best with censorship to try to make sure that Trump does not get re-election. And we know this from the whistleblowers with Project Veritas, the whistleblowers who came from Google and all the other tech companies. We know this stuff. Patreon only. Patreon could get pissed if I did that show with details. I don't know. It's risky. It's risky for me to say some of that stuff. It's probably best if I just do it like over a beer in person. There's so much crazy stuff going around here. This area, just for the last 10 years, this area has just gone more and more morally bankrupt. It gets weirder and worse every year. Now, since 2008 and 9. I mean, I've been here almost 20 years now. When I first came here, it didn't seem it was nowhere near as bad. Republicans and Democrats were not like at each other's throats. When I was in college, I dated some Democrat women and they didn't want to kill me or Lorena Bob at me. They didn't have a problem. I wasn't libertarian back then. I really wasn't political at all when I was in college. I cared about like video games and sports and partying and girls. Yeah, I have to be careful with the sugar daddy stuff. I don't want to go into too many details. Okay, well, I want to thank everyone for their time. That's it for right now. And the links to the Fed speech, the New York Fed speech that this lady gave on November 4th will be in the information and description section. But we're going to have to watch the Fed's official balance sheet each week now, because if it's growing between 20 billion and 50 billion per week, the annualized numbers, if it's 50 billion or 52 billion per week, you're looking on an annualized pace of like, I did the numbers last week. It was like a 2.7 trillion increase in 12 months. And just in the last 2 weeks, the Fed balance sheet is now up. So 20 plus. One second, let me take a look at the numbers here. $72 billion. The Fed's balance sheet is now up $72 billion in the last 2 weeks. $72 billion. The not QE program, only officially $60 billion per month. Things that make you go, and yet the dollar is rallying. Go figure, right? Yeah, but Leo, there's a double standard though. Girls don't get in trouble for that. Okay, everyone, bye for now. Thank you for your time, and I'm going to work my butt off to create the most unique content with information, analysis, and research for investing in the economy.